But it's now for more. Angie Pacis, the CEO of AIA Investment, joining us live. Welcome back, Angie. And post-Liberation Day, mid-90-day pause. So how are risk appetites looking with your diverse clientele?
Okay, it's still depressed as ever. As you know, the wait and see, right? When you have a barking dog in front of you, you're actually frozen. So that's exactly how people feel. Nobody can take big bets because you don't know how this 90-day reprieve will turn out. There could be some successes, or on the other hand, there could be really an escalation of the trade war, and that is actually going to dampen risk appetite.
Right, and I didn't like the word stagflation, but Security Bank had to say it. So that's the
Mhm.
risk of high unemployment, slower growth, higher inflation. What's the
Mhm.
possibility?
Okay, it will not impact all countries evenly. So the Philippines is unique. Well, not really unique, but it's lucky in the sense that we're actually a domestically driven economy. So three-fourths of our economic activity is driven by consumption spending, and we actually have tailwinds there insofar as lower interest rates and also lower inflation. So if you actually take a look at, bifurcate between what the stock market is going to do and what the real economy is going to do, I think we're gonna hold up really well, actually. So we're not looking at stagnation. In fact, the Philippines is actually expected to be one of the fastest growing economy in the world, with uh, growth expected to be between 5.9 to 6%, downgraded from a high of 6.2, but still a decent growth nonetheless. Now,
Which,
insofar as
yeah, which leads us to
so,
where the Banco Central might take interest rates. If that's going to be the
mhm.
case, could it be three more cuts this year or less?
Okay, so that they really have to move in step with what the U.S. Federal Reserve is going to do. But they've actually pulled the trigger, in the sense that they called it early and said, there's higher risk to growth, and therefore they cut rates ahead of the Federal Reserve. Now the program is really another two cuts this year. So what will actually derail it if there's really a lot of there's another attack on the peso, a speculative attack on the peso, and if the U.S. Federal Reserve actually holds its rate cutting cycle. But nevertheless, even if the Federal Reserve actually holds up on the cutting, our expectation is, uh, the Philippines actually benefits from lower commodity prices brought about by weak demand expectations. So it actually is a tailwind for the Philippines. So we're not expecting stagflation,
Got that.
but
Okay, that's a
yeah,
good way of putting it then. We'll think of the good tailwinds for now.
yeah.
Angie, thank you so much. Angie Pacis of AIA Investment.